natural gas markets across the world are really fragmented. It's not like the oil markets where we can talk about a couple of benchmark prices like WTI and Brent, largely representing the world oil prices. When it comes to natural gas, huge price differences across different regions. You've got the Henry Hub contract in the US, which is the most liquid and most traded contract, the most accessible for investors. So that's where we tend to focus on in terms of prices. But here in Europe, there's the title transfer contract, which is at least 5 times the price of the Henry Hub contract. And obviously, Europe has been at the epicenter of this energy crisis that started off with the Ukraine war last year. Now, the Ukraine war last year sent gas prices in Europe up 50-fold, and it had a knock on impact on the US prices because US gas can be exported through liquefied natural gas to other markets. It's not that easy as going through pipelines, and that's why you have these big price differentials, but it can be. So that's why we saw that big knock on impact onto Henry Hub last year. But when we came to the winter of last year, it turned out we were extremely lucky. Europe had a very mild winter and didn't need anywhere near as much natural gas as was expected, and prices came crashing. And then they crashed further into this year because the European Union has been building out a lot more storage facilities and filling those storage facilities to really high levels. Their target was get them 90% full, and they kind of met that target a couple of months early. So we're sitting here right now on the brink of winter with lots of natural gas in all the storage facilities around Europe. And so we're in a relatively good place. That's why natural gas prices are lower right now than they were even before the Ukraine war started. We're not without risk. The flow of natural gas from Russia into EU has trickled down to zero. So you have to rely on all this on this inventory. If you have a cold weather spike, that would run down the inventory very, very quickly. Now, weather forecasting is one very difficult thing to do. Beyond a couple of weeks, it's very hard to make those forecasts. So there is that risk of a cold weather snap. Maybe less likely because we are in what was called an El Nino weather pattern, and we are seeing some warming as a result of that. So the winter is more likely to be warmer than it is to be colder than normal. But once again, weather is a hard thing to predict. Also, we may see a little bit of softening of demand if the effects of all this monetary policy is taking effect and we start to see the economy slow down. So we're probably going to see enough natural gas supply and be in a sort of plentiful supply to meet demand. But once again, weather could change the cards pretty quickly.